Well, tonight, Hoosiers are struggling to afford the American dream of owning a home. It's a huge issue in Fishers, where families are constantly getting outbid by large companies who turn around and rent the property out. Money Magazine named the city one of the best places to live in America, but families are giving up on trying to find a home there.
It can be, discouraging when you get overbid by, companies.
How do you save when you're spending $2,200 a month just to rent?
Now, in some Fishers neighborhoods, investors own more than half of the homes, turning them into rentals. In fact, the Colliers were outbid 4 times in recent weeks by investors with all-cash offers. And it's making it an already hot housing market even harder to navigate. But our Rachel Kraus found out this week's interest rate hike could help cool things down.
It's definitely having an impact on people's pocketbooks.
News of the Federal Reserve's hike to interest rates by 0.75% didn't come as much of a surprise for realtors closely watching the market. Lynn Wheeler says interest rates have been unusually low for a long time. This will set them back at a more normal level.
The big problem that it puts on people, or the big strain, is affordability. So the average home in central Indiana is about $260,000, and this raise added about $400 per month to the monthly payment for the average individual putting 20% down.
Economist Kyle Anderson says the Fed's rate hike will have many families feeling the squeeze, but he says it's a necessary pain after the economy bounced back a little too quickly from COVID-19 lockdowns.
What happened was demand rebounded very much. People were ready to get out and spend and buy things, and jobs were plentiful. But the supply chain disruptions meant that we couldn't bounce back on the supply side. So prices had nowhere to go but up.
So how will the Fed's interest rate hikes help? Take the housing market. Anderson says with interest rates now higher, fewer people will be interested in buying homes. That'll mean fewer homes being built over the next few years. That will cool the housing market and allow the supply chain to catch up to demand, allowing prices to stabilize and inflation to slow.
It's certainly going to slow down the economy, and we've had a nicely growing economy. We've got low unemployment. So we're running a risk that some of those things are going to turn around and maybe we'll head into a recession. So that's not a good thing, but it's probably worth the risk because we need to get inflation under control.
And until that happens, Wheeler says it'll continue to be a challenging market for people looking to buy.
We definitely have a lack of inventory and still high demand. So you'll still see multiple offers. You'll still see people rushing to the market. It's just going to be a little bit more unpredictable than it's been over the past year or two.